Hi friends, today's topic is continuation of unsold stock valuation in consignment business. Watch my previous video regarding unsold stock, then you will understand this topic clearly. What is the difference between previous example and this one? In previous example, consignor sent 100 boxes. Means quantity was given, but in previous example consignee sold 80 boxes, so unsold stock is 20 boxes. We know the quantity of unsold stock, but observe this problem. Here Ravi is a consignor who is living in Hyderabad. He is sending 50,000 worth goods to Gopi on consignment business. Gopi is living in Vijayawada. Observe here, Ravi is sending 50,000 worth goods to Gopi. But how many goods Ravi is sending? Quantity is not given here. That is the new point. And to send these goods, Ravi incurred expenses. Freight expenditure 2,000, insurance 1,000. Total expenditure incurred by consignor is 3,000 rupees. Then Gopi, to receive the goods and to take the goods to his godown, he spent transportation charges 500 rupees and the coolie expenses 300 and octroi 200 rupees. Octroi means what? In previous video I explained about that. From one city to another city, when you are transporting the goods to municipal corporation, we should pay some local tax. That is called octroi. Then here this 3,000 rupee and consignee's expenses 1,000 rupees both come under direct expenses, because only for one time we are spending this amount. Up to consignees go down, we spent all these expenses. To send the goods to consignees go down, we incurred this expenditure. So they come under direct expenditure or non-recurring expenditure. Now, out of these goods, consignee was able to sell 3/4 of these goods in current year. So at the end of current year, how many goods are left over with consignee? 1/4 of the goods. In previous example, 20 boxes were left over by consignee. Quantity is given. And in this problem, instead of mentioning that quantity, he is giving the unsold stock quantity in fraction basis. Then how to calculate the unsold stock value? You know, this is the formula to calculate unsold stock. Proportionate cost price to that proportionate expenses of consignor. Which expenses? Direct expenses and proportionate direct expenses of consignee. If you add these three, then unsold stock value comes. Now, first one is what? Proportionate cost price. Total goods cost is 50,000 rupees. Then, how many goods cost price we need? How many are unsold? 1/4. So, 1/4 of 50,000 becomes the cost price of unsold stock. Is equal to 12,000 500 rupees. To this, add proportionate direct expenses of consignor. Consignor expenses 2000 plus 1000, 3000 is direct expenditure. This direct expenditure belongs to total goods, 50,000 worth goods. But we want only 1/4 goods value. Therefore, in the total consignor expenses also, only 1/4 goods related expenditure we should consider. And proportionate direct expenses of consignee. Consignee's expenses are of two types: direct expenditure, indirect expenditure. Direct expenditure means what? To bring the goods up to consignees godown, the expenditure which is incurred by consignee is called direct expenditure. After bringing the goods to godown, now consignee incurs some expenses to sell these goods. All those expenses come under indirect expenditure. Then all these three expenses come under direct expenses, no? Then what is the total of this? 1000 rupees. Consignee expenses, that too direct expenditure is 1000. 1000 rupees is spent on total goods, 50,000 worth goods. But we want to calculate unsold stock value. Therefore, only 1/4 goods cost we need. How it will come? 1000 into 1/4. 250 rupees. Then add all these amounts. This is unsold stock value. Now, sometimes instead of giving fraction, he may give the sale quantity in percentage form. For example, consignor sent 50,000 worth goods and the consignee sold 75% of these goods. Then unsold stock quantity is 25%. Then how to calculate? While calculating proportionate, instead of taking 1/4, now remaining stock is mentioned in percentage form. No. If 75% is sold, then the remaining is 25%. So in the place of 1/4, we should take 25%. Then unsold stock value comes. Remember, unsold stock, sometimes he gives in form of quantity. 20 boxes were unsold. Sometimes he gives in the form of fraction. 1/4 of the stock was unsold. Sometimes he gives in percentage form. 25% of the goods were unsold. Okay? Then unsold stock calculation is completed. Now next we will see how unsold stock will be shown in the consignment accounts. Consignor prepares ledger. His ledger contains three accounts: consignment account, then consignee account, Gopi account, and goods sent on consignment account. Then unsold stock reflects only in consignment account. In Vijayawada consignment account, which side we should write unsold stock value? Credit side. In our example, how much unsold stock we got? 13,500. We should credit it. Why? Because when goods are sent on consignment, then the cost price of goods sent, where we are showing debit side. In previous video I have explained two goods sent on consignment, and when consignee sells the goods, since it is an income, we are showing that in credit side. Then goods sent how much? Total. And out of them, 3/4 goods were sold by consignee. And remaining goods value, 1/4 goods value, we should show in credit side only. No? If you show as closing stock in current year, then only in next year when you prepare consignment account, you can show this amount as opening stock. Why we have to credit consignment stock in consignment account? Because debit side total goods cost I am writing, credit side how much is unsold, that quantity value we are writing, and the remaining goods value also we should consider. If unsold stock value is not credited to consignment, then what happens? It gives the meaning that total goods were sold for this amount. Means there is no unsold stock here. Actually, how many goods were sold for this value? 3/4 goods. But according to accounts, we are mentioning that total goods were sold for some value. Means in current year, there is no unsold stock. Since there is no closing stock in current year, in next year, there is no opening stock. But practically what happened? Consignee is not selling entire goods. Only 3/4 of the goods were sold by consignee. With consignee, 1/4 goods are there. In next year, assume that 1/4 goods he sold for some value. Where we write sales? In consignment account, credit side we write. Observe, opening stock we are not writing, but we are writing that we sold goods for some value. Means without having the stock with us, we were able to sell the goods. How it is possible? Why we are not writing opening stock? Because in current year we are not writing closing stock. These many problems will be there. Therefore remember, whenever there is closing stock in consignment business, it should be credited to consignment account. Closing stock value is 13,500. No? Then which account is to be written here? Consignment stock account. In consignment account, credit side I am writing consignment stock account. Then what will be the journal entry for this? If you want to post in credit side of consignment account, in journal entry also, which account is to be credited? Vijayawada consignment account. And what you want to write here? Consignment stock. Then in debit side, we should write that word. So remember, in consignor books, for unsold stock, the entry is consignment stock account debtor to Vijayawada consignment account. Since Vijayawada consignment account is in credit side, in this account, credit side we should post. In consignment stock account, debit side it comes. Then, consignor books completed. Now let us see how consignee records these unsold stock value details. When goods are coming to consignee, is he writing any entry for that? No, because he is not the owner of those goods. He is only an agent. Where he records them? In stock register. Since there is no entry when consignee is receiving the goods, there is no entry for consignment stock also. Therefore, in unsold stock problems, when you are preparing consignee accounts, you need not to calculate the value of unsold stock and you need not to write any journal entry for that. So, consignor only is concerned with unsold stock value. Hope this video is clear to you. Thank you.